Good morning and welcome to today's episode of Crypto News Daily. We have a packed show for you covering the latest developments in the SEC's case against Binance and the explosive growth of Robinhood's crypto revenue.
That's right. The big news this morning is the SEC and Binance's joint request to pause their ongoing lawsuit for 60 days. This comes as a surprise, given the aggressive stance the SEC has taken against crypto exchanges in the past.
Exactly. And this move has significant implications for the entire industry. If the judge grants the stay, it could signal a shift in the SEC's approach to regulating crypto. We'll dive deeper into what this means for Coinbase and other exchanges facing similar lawsuits.
It's also worth noting that this development could be seen as a positive sign for the crypto market as a whole. If the SEC is willing to take a step back and reassess its approach, it could lead to more favorable regulations in the future.
Absolutely. And speaking of favorable trends, Robinhood's Q4 earnings report is making waves in the crypto space. The brokerage posted a 700% surge in cryptocurrency trading revenue, driving record profitability.
That's staggering growth. Crypto revenue accounted for more than a third of Robinhood's total transaction-based revenue, which rose over 200% to $672 million. This is a clear indication that retail investors are still hungry for crypto despite the market's volatility.
And it's not just the numbers that are impressive. This growth is a testament to the resilience of the crypto market and the increasing mainstream adoption of digital assets. We'll explore what's driving this growth and what it means for the future of crypto trading.
As we delve deeper into these stories, we'll also examine the broader implications for the crypto industry, from regulatory developments to market trends. We'll cover it all. So, let's get started with a closer look at the SEC's truce with Binance and what it means for the future of crypto regulation.
And don't forget, we'll also be discussing the potential implications of this development for Coinbase and other crypto exchanges facing similar lawsuits. It's going to be a fascinating conversation, so stay tuned.
Earlier, we touched on the concept of decentralized finance, or DeFi, and how it's changing the game for investors. Building on what we discussed, I'd like to dive deeper into the world of stablecoins and on-chain money markets.
That's right. The stablecoin revolution is upon us, and it's challenging traditional finance's notion of risk-free rates. According to Index Co-op's Cruise Enox, DeFi's base rate for lending stablecoins is a structural shift that demonstrates the sustainability of high-yield, low-risk on-chain money markets.
For our listeners who may be new to this concept, can you explain what's meant by the risk-free rate in traditional finance?
In traditional finance, the risk-free rate is the interest rate an investor can expect to earn on an investment that carries zero risk. It serves as a fundamental benchmark for all investment decisions. Think of it like the return on a U.S. Treasury bond. It's considered virtually risk.
That makes sense. So, how does DeFi's base rate for lending stablecoins challenge this notion?
Well, DeFi's on-chain money markets are showing that high-yield, low-risk investments can be sustainable, which goes against traditional finance's understanding of risk-free rates. This could have significant implications for investors and the broader financial landscape.
Speaking of investment strategies, I'd like to shift gears a bit and talk about the performance of crypto midcaps. Our next story, Size Matters, highlights the struggles of mid-cap digital assets.
That's right. According to CoinDesk Indices' Andy Bear, crypto mid-caps are offering investors less reward and more risk. While some investors may seek hidden gems in the next tier of market capitalization and liquidity, that pursuit has generally not been rewarded.
And what about volatility? I recall that mid-caps have been known to be more volatile than their large-cap counterparts.
Exactly. Mid-caps have delivered significantly higher volatility, making them a riskier bet for investors. This raises the question of whether a large-cap tilt in digital asset investing will deliver excess returns to investors.
That's a great point. It seems that in the world of crypto, size does indeed matter. As we continue to navigate this ever-changing landscape, it's essential to consider the implications of market capitalization on investment strategies.
Absolutely. And as we've seen with the stablecoin revolution, DeFi is challenging traditional finance's norms. It will be interesting to see how these trends play out in the coming months and years.
We were just discussing the impact of global politics on the crypto market, and looks like we have another example of that playing out. I'm seeing reports that Alexander Vinnik, the former operator of the BTC exchange, is being released from U.S. custody as part of a prisoner swap with Russia.
That's right. Vinnick had previously pled guilty to conspiracy to commit money laundering. So it's interesting to see him being released in this swap. It's worth noting that the U.S. is getting Mark Fogel, an American teacher who was jailed in Russia, in return.
Building on what we discussed earlier about the intersection of politics and crypto, this prisoner swap highlights the complex relationships between governments and the crypto industry. It's not just about regulating the industry, but also about how governments interact with each other on issues related to crypto.
Absolutely. And speaking of regulation, it looks like former President Donald Trump has made some key decisions on his crypto regulation team. He's nominated individuals to lead the Office of the Comptroller of the Currency and the Consumer Financial Protection Bureau, among other agencies.
That's a significant development. With these nominations, the field of major nominees is mostly complete, and it shows a deep roster of finance and federal expertise. It's clear that Trump is serious about shaping the regulatory landscape for crypto.
It's worth noting that these nominations are not just about crypto, but also about the broader financial industry. However, given the growing importance of crypto, it's likely that these regulators will have a significant impact on the industry.
I agree, and it's interesting to see how these nominations will play out in the context of the current regulatory environment. We've seen a lot of uncertainty and confusion around crypto regulation in the US, so it will be important to see how these new regulators shape the industry.
Definitely. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. In the meantime, it's clear that the intersection of politics and crypto is going to continue to be a major story in the coming months.
That's right. And as we've seen with the Vinnick prisoner swap, these issues are not just limited to the US. The global implications of crypto regulation are significant, and we'll be tracking these developments closely.
We just discussed the growing interest in tokenized assets, and now it seems like Franklin Templeton is taking a significant step in that direction. They've expanded their $594 million market money fund to Solana, making it the latest blockchain to support trading of their on-chain U.S. government money market fund.
That's right. This move comes on the heels of Securitize linking up with Solana to bring tokenized real-world assets to the network. It's clear that Solana is becoming a more attractive option for tokenization issuers, even if Ethereum remains the dominant player in the space.
Absolutely. And it's worth noting that this isn't just a small-time player. With a $594 million market cap, Franklin Templeton's on-chain U.S. government money market fund is the third largest tokenized money market fund out there. This could potentially bring a lot of liquidity to the Solana network.
Building on what we discussed earlier about the importance of liquidity in the crypto market, this could be a big boost for Solana. More liquidity means more opportunities for traders and investors, which could lead to more adoption and growth.
Speaking of growth, it's interesting to see how the intersection of technology and media is evolving. I saw a story about an Israeli AI artist who created a video using non-consensual celebrity deepfakes to combat Kanye West's anti-Semitic posts.
Yeah, I saw that too. The artist's intention was to highlight the dangers of hate speech, but the execution was widely criticized. Scarlett Johansson and other public figures came out against the video, arguing that using someone's likeness without their consent is a major overstep.
It's a complex issue, and one that raises questions about the ethics of AI and deepfakes. On the one hand, the artist was trying to make a point about the dangers of hate speech. On the other hand, using someone's likeness without their consent is a clear violation of their rights.
And it's not just about the ethics of AI, it's also about the potential consequences. If we start to normalize the use of non-consensual deepfakes, it could lead to all sorts of problems. Imagine if someone created a deepfake of a world leader or a major celebrity, and it was used to spread misinformation or propaganda.
Exactly. It's a slippery slope and one that we need to be careful about. As AI technology continues to evolve, we need to make sure that we're thinking carefully about the potential consequences and making sure that we're not sacrificing people's rights and dignity in the process.
We've had quite the day in crypto news, from Elon Musk's latest antics to some interesting institutional investment moves. Let's dive back into the story about Musk's new moniker, Harry Bolts. and how it affected the Solana meme coins.
Yeah, it's been a wild ride. Those two Solana meme coins, Harry Bowles and Harry Bulls, saw their market cap skyrocket to $25 million and $8,500,000, respectively, after Musk adopted the name. But as we all know, the crypto market can be cruel, and those tokens plummeted after Musk dropped the moniker.
I mean, it's not surprising, really. We've seen this time and time again with meme coins and celebrity endorsements. It's a fleeting moment of hype, and then reality sets in. But what's interesting here is the power of influence that someone like Elon Musk has in the crypto space.
Absolutely. And it's not just limited to meme coins. We've seen Musk's tweets move the markets for major cryptocurrencies like Bitcoin and Dogecoin. It's a reminder that despite the decentralized nature of crypto, there are still key figures who can shape the narrative and influence investor sentiment.
Speaking of institutional investors, let's talk about KULR, the publicly traded firm that just added more Bitcoin to its treasury. This is a company that provides energy storage solutions for aerospace and defense companies, and it's been steadily accumulating Bitcoin since December.
That's right. KULR has now purchased a total of around $52 million worth of Bitcoin. And it's interesting to see a company outside of the traditional finance space making a bet on crypto. It's a sign that institutional interest in Bitcoin is still strong, despite the recent market volatility.
And I think that's a key takeaway from today's news. Despite the ups and downs of the market, there are still plenty of investors, both institutional and individual, who believe in the long-term potential of crypto.
Absolutely. And as we look ahead to the rest of the year, I think we can expect to see more institutional investment in crypto, as well as continued innovation and adoption in the space.
So, to wrap up, it's been a wild day in crypto news, but there are still plenty of reasons to be optimistic about the future of this space.
That's right. And as always, we'll be here to guide you through the ups and downs of the crypto market. Thanks for tuning in, and we'll catch you all tomorrow.
And before we go, just a quick reminder to follow us on social media for all the latest crypto news and updates. Until next time, stay crypto savvy.
And final thoughts from me, keep your eyes on the fundamentals, stay informed, and never invest more than you can afford to lose. See you all tomorrow.